So, welcome back, friends. The S&P 500 has been relatively unchanged this Wednesday after a new report showed that the private payrolls surprisingly decreased for the month of June, raising concerns over the state of the US economy. The benchmark index traded around a flat line with the Nasdaq gaining around 0.2%. The Dow Jones Industrial Average is currently down 94 points. The private sector has lost 33,000 jobs last month, according to the latest report by ADP. This marks the first monthly decline in ADP's payrolls report since March of 2023. Economists polled by the Dow Jones expected payrolls to grow by 100,000. This report comes with the stock market near the record highs, despite concerns that a lingering trade tensions between the United States and the other countries could slow down the US and the global economic growth. To be sure, the ADP report has a lackluster record. Predicting the government's monthly jobs report, which is due on Thursday, economists expect the growth of 110,000 jobs for the month of June. The market may also be taking some solace in growing expectations for a Federal Reserve cut later this month or latest in September. Earlier, there were expectations that the earliest cut would be in December. Now, the CME Group's FedWatch tool shows a roughly 23% chance of the central bank lowering rate at its July meeting, up from 20% a day before. So we have been frankly seeing a weakening of the labor market for months and months now, and one wonders whether it would take a negative payroll sprint to get the Federal Reserve to pay a little more attention to the labor market as opposed to the inflation picture. Wall Street is coming off a mixed session, with the Dow surging 400 points while the S&P 500 and the Nasdaq closed lower after a broad decline in tech shares. The Dow got a boost as investors yesterday rotated into the materials and the healthcare stocks from the technology stocks. So friends, that's the state. We also need to keep an eye on President Donald Trump's tax and spending bill, which narrowly passed the Senate on Tuesday. That was just by a vote cast by the Vice President that helped it sail through. The measure returns to the House, where there are still holdouts amongst the GOP lawmakers. So we can expect to see more volatility in the fixed income even once they get the bill passed, whatever that looks like. And there is going to be great amount of turbulence once things gets resolved, not only on the bill, but also on the tariffs front, for which there's a July 9 deadline. There has been a warning given to Japan now. So there's quite likely that the treaty may not culminate with all the countries. There may be some left out, and based on that, the markets can react. Friends, it's going to be a very important month for stocks. Not only the tariff decisions, where the markets are going to head from here, depends both on geo-economic and geopolitical factors. To get to know where the US markets are headed in the short, medium, and long term, do join our Prime Plus Telegram group, and we'll tell you scientifically analyzed data where the markets are headed on a weekly, monthly basis. And for the Indian markets, you can join the Premium Plus, which gives you 10 to 12 days predictions in advance and good multipackers. For the US markets, you can WhatsApp us on 732-732-2720. Whereas for the Indian markets, you can WhatsApp us on 982-086-1044. Happy investing and have a nice day. Take care. Bye-bye.